Hello, good evening, everyone. Good to see every one of you on a Wednesday evening. This is Alex from MarketWise Asia. Okay, so I can see that the people are streaming in already. So good to see you. 晚上好. Okay, so if you guys can hear me loud and clear, please say a hi to me in the chat box. Okay, so remember to send in your chat or any question. Okay, to everyone, because if you just type host and panelists, only me and Jay can see your chat or your comments. Okay, so we can make it lively, and as you guys know, right, Jay like to see comments and such, so make this session a lively session. Okay, so let me take a look at the comments right now. Hello Francis, hello Gabriel, Edric, Sajid, okay, Mei Shan, Xinhua, James, Mui Mui, okay, so Wen Jie, Clement, okay, Imran, Cheng An, okay, so good to see every one of you here. I know today is a Wednesday evening and right now it's 8 p.m. already, so we are starting real soon. So thank you so much for being here and being on time today. So I hope you guys already had your dinner. Just a very quick show of hand over here, right? How many of you actually attended Jay's session during the Market Insights Virtual Summit that was held last weekend? So if you attended Jay's session, right, just type me in the chat box. Just type me in the chat box. All right, so fantastic. Okay, so anyone of you here who is the first time listening to Jay or have not heard from him before, have not heard from him before or seen him anywhere else, this is the first time, just type 1 in the comment, So you have never heard of Jay, never watched his webinar before and such, okay, never attended the Market Insights Virtual Summit or anything, just type 1 in the comment. Just type 1 in the comment. Okay, I don't see much response, so I believe a lot of you here are old birds already. Okay, hello Winnie. Okay, welcome you. All right, welcome you. So yeah, so just another simple housekeeping rule, right? If you want to send your chat to everyone, remember to send in to everyone instead of just host and panelists. Okay, instead of just host and panelists. Okay, so Dennis is asking question for Jay. What hair gel do you use? Maybe later Jay will answer this question. And okay, yeah, by the way, right, so later we also focus quite a lot on the Q&A. We want this to be an interactive session, okay, and a lot of how the session goes depend on you as well. So if you want Jay to answer you, have some question to ask him, remember to ask your question in the Q&A tab. Q&A. So you should see the button, the Q&A button or tab, at the bottom of your screen, whether you are using a mobile or using a desktop. Okay, remember that. Okay, remember that. So right now we have about 200 plus people already in the room. Okay, I know you guys' time is precious. I shall not waste your time. Okay, for those right who don't know who is Jay, right? So let me just do a very quick introduction of Jay. Okay, so with a keen interest in trading and investing, Jay, actually follow his passion and embark his trading journey in 2009, and reading dozens of trading books and attending numerous training programs. He found consistency and has been trading independently for the last 10 years. And he has been trading the market actively since 2011 and is well versed in equities, options, and index trading. And having traded each of these market extensively, he built his trading philosophy on the concept of consistency. And in 2016, right, Jay actually obtained the advanced certificate in training and assessment by the WDA of Singapore and is now actually an ACTA certified trainer. And he also actively uses adult learning principles and methodologies to facilitate his training sessions, making it a fun and immersive experience for his training. And by the way, right, I believe some of you received Jay's email, right? In the email, right, he mentioned that you received a free ebook, right, Trend Master: How to Spot any trend in just 3 seconds. Okay, so for those, I believe most of you have already downloaded the book through the virtual summit already. So if you are new here, first time here, right? Okay, I'll post this free bonus ebook in the chat box. Okay, so I'll post it in the link. You should see it. So very simple, bit.ly/trendmaster. Okay, you can head over to the link later. It is free for you to download and it's written by yours truly. Okay, that's me. All right. So yeah, so there you go. I'll post the link in the comments already. So by the way, today is not a cooking session. Okay, so if you think this is a wrong webinar, then we can head out. But I believe most of you guys here know today's session is about trading. Okay, and Jay today will discuss with you, right? Okay, about the market correction recently, the market tanking. So are there more downside to come? So what are the key levels you must know for you to be buying in confidently? And is it too late to actually short the market right now? And how can you focus on the strong spots for your trading? So I think there's a lot of content to be shared today. So without further ado, let's welcome Jay. Jay, are you there? Can you show us your handsome face to the audience right now and say a hi to the audience right now? Okay.
All right. Hello, everybody. Welcome to tonight's webinar. All right. Thank you, Alex.
Yeah, no problem. So right now we have about 250 people in the room already. I expect there'll be more people to be streaming in. Okay, so first question for Jay. Okay, Q&A. What is the hair gel that you are using? That is asked by actually Dennis. Okay.
Oh my God, the hair.
It's always the same question, right?
Yes, it's always the same question. I use actually the trick is not in the hair gel. The trick is in the spray. The trick is in blowing your hair and set it up before you spray it, and that's how it will be for the whole day.
So there you go, you have the answer already. Oh, okay, by the way, I also see that the Q&A, there's already a question already. So I believe as we go along this session, there will be more Q&A. So we'll see how it goes. By the way, if there's too many questions, we will also answer the most popular one. So there is an upvote button. You can see a thumbs up just beside, I think just below the question, right? So just vote your question. So we will answer the most popular question first. Okay. So yeah, so for those who don't know, Jay is my good friend, and I always call him the stock god. I think some of you might know Gu Shen, stock god. So a lot of content to share. If I don't start now, we can talk until 12 a.m. So without much further ado, I shall hand the session to Jay now. So all over to you now, Jay.
All right, great. Thank you. Thanks, Alex. Thanks for having me once again. Every time I must laugh when you make the intro. Okay, so a cursory, what I call it? Let me share my correct screen first. Okay, so a cursory welcome to all of you to tonight's webinar. And to make sure that you can see my screen, you can hear me loud and clear, you can see me as well. Can you just once again type hello in the chat? Okay, can you just once again just do that? Type hello in the chat. All right, great. Hello, all good. And I think I see many familiar names. Like, how many of you are from my community? That means you are enrolled as a student. Can you type me? I see many names. Okay, can, no problem. Okay, so let's keep tonight's webinar, right? Yeah. Hi. Hey, Brandon. Hey, Brandon, Mike, Edric. Quite a fair bit. Paywen, Calvin, yeah. So thank you for coming. Thank you for showing up on time. So today, right, like Alex mentioned, I have quite a fair bit of stuff that I want to follow up from my sharing on the Market Insights Virtual Summit, because on MIVS I was the first speaker, so I was gently reminded not to overshoot. If not, the whole day will be just misplaced by 15 minutes or so. So during the summit itself, I was touching on the main points, and there were quite a fair bit of questions from the audience, from yourself. And today, right, I would like to take this time, right, to answer most of these questions, because that's what this booster webinar is for, to answer questions. So to kick things off, right, can we have an amicable, a very fun environment for all of us tonight? And if you got any questions, you feel free to ask me. Okay, so can we have that? Is it okay with everybody? Is it okay? If it's okay, can you just type okay for me? Then, as you know, lah, my webinars, my seminars, right? I always like to ask questions like okay, 1, 2, okay, yes, no, that kind of things. So the reason why I ask you, right, is so that you will be engaged, number one. Number two, right, when you participate in terms of your answer, you will also register the concept much better. So that's the purpose. It's all done for you, not for me. Okay. So yeah, I would really, really appreciate it if you can, reply me promptly. And at any one point in time, right, I also have to highlight this because in the previous editions of this booster webinar, there were a few, not a few lah, maybe just one time lah, I think. So there were some people, they are not happy with certain things I've said for whatsoever reason. I mean no disrespect. But at any one point in time, if you think that the things I'm wasting your time, number one, you're not getting value, feel free to leave the room. Don't create a scene, because why? I still have to go and find from your name the list, from the participants list, and remove you from the room. It's going to be a waste of all our time, because time is precious. Time is of constraint, right? If I spend 10 seconds, we got 300 people here, I'm wasting 3,000 seconds collectively. So is that okay? So let's keep this in a fun, loving, and the kind of learning environment that is fun for everybody lah. So at the end of the day, you spend time with me. I want you to get value. I want you to get entertainment. That's what I want for you. Is that okay? Can everybody agree to this? If you don't agree to this, you can leave the room now. It's okay, because I'm purely just going to give you my point of view. That's all. Okay, Ken? Okay, thank you so much. Okay, so let's touch on or expand on what I mentioned, right, during the Market Insights Virtual Summit, because that time I think we talked about a few macro factors that were affecting the market. The conclusion was that we are not expecting a bearish drop immediately. That was the conclusion. So can I just have a idea, right? How many of you attended my slot on last Saturday? Like not last, but the last Saturday. How many of you attended my sharing during then, MIBS? Can you just type me? Okay, good. So for those of you, right, that have not attended, that did not watch the replay, like you have no idea what am I talking about, that time, right, I mentioned down a few factors lah. So let me just summarize the factors and write it down on the screen right now. So these factors, right, we are looking at two main factors. The war, it's out of question. It has already been priced in. If you are looking at COVID or Omicron or Omicron, Delta, Cron, Omi X, I don't know what's the name now already. So COVID is also a thing of the past already. So if you think that the market will be affected by these two, factors, right, then you are living in the past. When we trade the market, we are always looking for something that is, we are taking actions in advance. We expect a certain thing to happen, and then we are taking action now. So to put it into context for you, right, let me ask you this very, very simple question. If you know that today in your current environment, in your current company, your current employment, if something were to change going forward, you know that maybe your department will be affected, what will you all do? What will y'all do? Can y'all tell me? If you know that your company will be affected, there will be some restructuring, what will y'all do? Can you type it in the chat for me? What will y'all do? Never mind lah, kill car lah, trade the market lah. Trade more lah, confused. Find another job, run, exactly. So if you know that there is some retrenchment, let me just write it down on screen, right? Retrench, maybe some restructuring going on in your employment, then you will take some action, right? You will do probably, job hunting. You will go and do something, correct or not? And you will do it when? You will do it now. You will not wait until the retrenchment happens. Then you start to act. Am I right to say that? Type yes if you agree. You will take action now if you are finding yourself in this situation. Type yes if you agree. Exactly. You can wait for payout, but you don't just, never mind, I wait for payout lah. But you also will go and look for what's the backup plan, right? Where can I continue my employment with? Who can I continue my employment with after I get a payout? So this will be all the questions that will be on your mind, yeah? And as humans, we are always forward-looking. Therefore, right, when it comes to the market, it is also the same thing. When it comes to the market, we are always taking action in advance, okay? We are always taking actions in advance. Can everybody type ADV, representing advance? Or you can type advance, the whole word. So we are taking advanced action in anticipation of what is to come on the market, in the market, right? And usually this whole advanced action thing, right, will lead to one phenomenon. Like, if let's say this news comes out supposed to be bad, but the market didn't drop. In fact, the market go up. Have you all encountered things like that? Like interest rate increase, market shoot up instead of dropping. How many of you encountered this? Type me. Exactly. Why? Because the traders, the market participants already take advanced action. They already priced in the movement. So this whole effect, it's called pricing in. So this was what I mentioned briefly during the MIVS slot that time on a Saturday. So this pricing in, right, has led to our market in Q1 just tanking, dropping by about 14% before recovering. So where are we going to move on from now? So tonight, right, I will build on some of these factors, developing trends, number one. Number two, the key levels, because for me, right, I'm a reactionary trader. I don't, I think a lot of you know my style. I don't just jump into the market. I don't just jump into it and, I expect this, then I'll just buy. For me, I don't. I wait for reaction. You can call me Hamzi, you can call me Kiasi. That's what I am. That's who I am. It means I want to wait for a reaction first to know that whatever I expect, right, not just I have the expectation, but many others, the market participants, big boys in particular, have the same kind of reaction. Then I jump in. I don't just, oh, wow, this is a support. Reach there, I buy. To me, it's, no, this is a support. I reach there. I have to wait for reaction. I have to know that, okay, if it's there, I'm expecting the prices to stop, right? Then I'm expecting it to stop. I better see it stop first. Then I pick it up from there. That is always the safer choice. It is not about jumping in first. In trading, unless you have, billions of dollars, you are able to move the market. If not, jumping in first will usually lead to a quite painful outcome. Like for example, if it breaks out, first one you go in, first one to get slaughtered is you. Usually it's like that because the market is like mean reverting. Okay, yeah, don't FOMO. Exactly. Okay, so far, this is where I'm coming from. So I want to clarify all this, right? So that in the pointers that I'm about to share, you will know what perspective am I coming in from. Okay, is that clear with everybody? Is that clear? Type clear if it is clear for you. All right, great. So the factors that were discussed on last Saturday, number one was the U curve. Okay, number one was the U curve. How many of you have no idea what a U curve is? Can you type 0 for me? If you have no idea. If you have some idea of what the U curve is, help me type 1. So 1 0 1 0 forgot. Forgot also equals to 0. So the U curve, right? Let me illustrate this very quickly. So what is this has to do with bonds lah. Okay, this has to do with bonds. What kind of bonds? The government bonds. All right. So you should be able to see a black color screen on my screen right now. It's the blackboard. So I'm just writing. Just to check, are y'all seeing the black screen? Yes. Okay. Good. Okay, because sometimes I activate the function here, y'all don't see it. Okay, good. So bonds, right? These are government bonds, and bonds have different tenor, right? You have the kind of 3 months bond. In the US, they call it a treasury bill. Then you have 2 years. Then you have 5 years. You have 7, 10, 20, 30. Okay, so all these are bonds. The different tenor for bonds. It's just like fixed deposit. You go to a bank. You can do a fixed deposit with them for 6 months, 1 year, 2 years, 5 years, etc. So if you link all this up together, okay, if you link all this up together, right, given that, like in a graph, red on black is not a good contrast. Okay, then let me switch it to blue. Yellow. Is this better? Is yellow better? Is yellow better? Okay, so the numbers can see, right, 3 months, then after you got 2 years, 5 years, 10 years, 30 years lah. Okay, so yellow is better. Okay, thanks for the reminder. Great. So the U over here, this is U. And then this is the number of years. All right. So there's a yield, there's number of years. And technically, right, common sense would tell you the longer the years, the higher or lower the yield. Can you type for me, higher or lower? The longer the years, higher or lower the yield? Higher, exactly. Just like your 2 years fixed deposit rate will give you a better interest rate than a 3 months fixed deposit rate. Yeah. So it's the same for all the government bonds. All right. So, and here I'm talking about government bonds. I'm not talking about anything. I'm not talking about like, corporate bonds. And let's say we have to plot them in a chart, right? We have 2, then we have 5, then I think we got 10, 20, then after that 30. Then the yield curve, right, is in X various percentage going upwards like that. So in normal circumstances, the yield curve will be upward sloping like that. So are you all following? Type yes if you are following. So this is a normal yield curve. Normal one, normal. Okay, normal. Very good. So this is a normal yield curve. And then when yield curve flattens, right, it represents a few things. Okay, it represents a few things. Now, what are the things? Now, the yield curve have a few different patterns. When it goes to normal, right, it can also become flatter. Okay, it can also become flatter. So gradually, instead of upward sloping, it can gradually flatten. So sometimes, right, the yield curve will look like that, flatten, which is the white color line. Can you see that? So this is a flat yield curve. Okay, flat yield curve. And then in some circumstances, right, some very, very rare circumstances, then you will see the yield curve start to have a mild inversion. Of course, I'm exaggerating it. The blue color line on my screen, this is called inversion. Okay, so this is how the yield curve will behave. Not all three at one time. Okay, the yield curve will shift. Okay, it will go from normal to flat to invert. Normal, flat, invert, normal, flat, invert. And all this, right, tells us a different state of mind of the market participants. Basically, what they do is they tell us the fear of the market participants. Are you all clear? Type yes if you are clear. Type yes if you are clear. Good. So how do they tell fear? How many of you want me to illustrate this relationship for you? How many of you want me to illustrate this relationship? Can you type me? Like to explain more. How come it tells you fear? Okay, can? So when why it tells us fear, it goes back to this one thing, the role of bonds. Okay, the role of bonds in this whole financial system. Is interest rate rising? Yes, interest rate is rising. So generally, all the bonds, right, the interest, the bond yield will go up a little bit as well. But I am looking at the shape. Okay, just for you to be clear, I'm looking at the shape of this yield curve. Normal, flat, invert. So basically, it's one curve, whether it tilts, whether it shifts up, shifts down. I'm looking at the shape. Okay, can everybody type shape just to confirm that we are looking at the same thing? Okay, shape. Thank you. Now, bonds, right? They are traditionally a safe vehicle. All right, they're traditionally a safe vehicle, whereas a stock market is considered as what is that? Risk market, risky asset. All right, so this is called a risk market. Why bonds are considered safe? Because you put in $1, you will get out $1, provided the government or the issuing agency doesn't collapse. So usually here we are talking about government. We are not talking about corporate. So bonds are safe vehicle. That means I want to park my money into a safe vehicle. Oh, got hurricane coming. Street level parking, I shift my car into the basement. I shift my car into an indoor garage. That's what is happening. Yeah. Whereas the stock market is like street parking. Okay, very convenient. I don't have to retrieve my car. Then every day, wow, wait 10 minutes, retrieve my car, get in the car, then after come back, wait 10 minutes to deposit the car. You wouldn't want to do that. Yeah. So in all else, right? Let's say everything, weather is clear and everything. The stock market is a risk market. It's just like street level parking. You are open and susceptible to all the weather elements. Okay, hurricane, whatever, bird shit, whatever shit drop on you, you also kena, the car also kena, right? So this is the stock market itself. And when we are talking about stock and bonds, right? They are like literally two sides of our palm. Okay, so one side is stock, one side is bonds. So they are a direct replacement in that sense. So whenever there is, and I saw a term just now, right? Flight to safety. Okay, can everybody type flight to safety? Not fight, flight to safety. Can everybody type that? What does that mean? Flight to safety means that there is something going on in the stock market. Everybody is like, oh, wow, the risk market, hurricane coming. Then what will you do? If you are a car owner, think about this. Street side parking. If you're a car owner and a hurricane is coming, you know that a typhoon is coming. What will you do to your car? Will you leave it there or will you shift your car away? Can you tell me? Can you just type it in the chat? So if you're a car owner, hurricane is coming, typhoon is coming, will you shift your car away or will you just leave it there as it is? Shift away, exactly. So this flight to safety so-called term, right? It's about money literally going from where to where? Going from the stock side, which is a risk market, over to the bonds. That is what flight to safety is. So how do we know that the money is in fact shifting into bonds? That's where the yield curve comes in. That's the whole purpose of this yield curve. Now, how many of us have a clearer picture now? Can you type me? So as you're typing, let me drink some water. All right. So now that you have an idea of what the bonds market is, the yield curve is, right? One of the things that is on everybody's mind right now, okay, one of the things is on everybody's mind right now is that the yield curve is inverting. There is an invert between the 2 years versus the 10 years, I think. So there was a very mild inversion, the 2 years versus the 10 year. There was an inversion. So should we be fearful of that? Well, let's look at this in detail. Okay, let's look at this in detail. Then let me talk about this first part first. Then after that, I'll talk about the second part. Will that be okay with everybody? Type okay if it's good with you. Yes, the inversion only lasted for a few days, for sure. It cannot invert all the way. Invert all the way, habis die already. Okay, so now, this is the place where I got my, or you can go and get it, okay, on stockcharts.com. So on stockcharts.com, right? On stockcharts.com, this is where you can get the dynamic yield curve. DYC. Can everybody type DYC for me? Dynamic yield curve. So this is readily available for you to explore and have fun with it. You can literally go and go to the website and look at it. So this is how a normal yield curve looks like. Please look at on my screen first, all right? So this is how a normal yield curve looks like. You have the 3 months bond, you have the 30 years bond, and then you have upward sloping, right? It's upward sloping. So this is how it normally looks like. So this is type number 1 called normal. Normal. Can everybody see that? If you can see that, have me type a number 1 for me. Have me type number 1. Okay, so normal, number 1. And how often will it change? How fast will it change to flat? Is it like suddenly just boom, come down? No lah, doesn't lah. This is like a massive, what do you call that? They call it like it's something like a container ship or oil tanker. It takes 30 minutes just to turn direction. It's not like a speedboat. Zoop, 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 zoop. You cannot turn all over the place one. All right. So you can see that the normal yield curve goes on from 2009. All right. This is 2009, the fateful year that I begin my trading journey. So from here, right, you can see that it's normal. Look at how slow the shift is, okay, over time. You will be able to see that normal can stay normal for many, many years until, okay, normal can stay for many, many years. In fact, that's 2009. Let me use this. Okay, see, this is a better illustration because right now, before running up to where it is now, I use a normal illustration first. So you see 2002, right? Okay, 2002, it goes normal. Then after that, slowly flatten. How long did it take? From 2002 to 2005. Can you see that? It will take a couple of years for the shift flattening to happen. So just now I was looking at here, 2002, 2003. Now it's about 2005. So it takes a couple of years for the yield curve to go from this to that. Clear? So far, okay, can see, type okay if you are clear, can see. Good. So what has happened? Let's delve deeper to go and look at, what is ongoing behind, because behind every movement, what I want for all of you, right? Whether you are my student or not, what I want for you is to understand. Don't memorize. Never ever memorize like, oh, this is good, that is bad. Because whether is it good or bad has to do with the context. Have to see with also have to see the reaction of the market participants. We don't just memorize things that are set in stone like that, because the kind of relationship is not static one. It will change. Okay. So I want you to understand. So let's delve deeper to go and understand a little bit. Can you see that the yield curve, right, has shifted up? Just now it was normal, right? The near term, the short-term yield curve have shifted upwards. What does that mean? The yield curve have shifted upwards. What does that mean? This means that money, it's flowing into the short-term bonds. Okay, money is floating into the short-term bonds, because when money go into the short-term bond, the bond you are getting at a higher price, the percentage is still the same. So your yield, sorry, why am I talking? Let me just do this. Sorry. Okay. So this one, the short-term one, let me, I also a bit like, why am I talking? So the money over here, right, it was from here. So how come there is this shift when there is a upshift in the yield curve? Okay, so let me just show you the relationship. When people are buying bonds, the yield will drop. So when people are selling bonds, the yield will increase. Okay, the yield will increase. So this is the general relationship. Okay, are we clear with this relationship? If you are clear, type yes. Okay, type yes with this relationship first. So what is happening here? What is happening here? This is where, when the curve is normal, right? It looks like that. There is an upshift in the yield. What does that tell you? People are selling the near term, and then where are they shifting to? People are selling the near term, and they are slowly shifting into other areas, not the near term. It can be going into the stock market. It can be going into the slightly longer term one as well. It can be going into that. But if the general curve shift up together, what does it tell you? It tells you that the market is going there. Okay, the money is flowing there. So by looking at all this, right, what are we implying? We are actually looking at money flow. We are literally just looking at money flow, implied money flow, where the money is going. Because nobody is going to tell you, hey, today I'm going to buy this, today I'm going to buy that. Then you will go and do a ledger of and track where they exactly put their money to. Is it, we are not accountants, right? So we make use of all this, right, to help us imply. So if you can see that the yield curve shifts up generally like that, okay, shift up generally, this means that there is the yield curve shifts up. Generally, people are selling the bonds. So the money goes to where? The most common assumption will be the money go back into the risk market. The most common assumption. Okay, so this is one of the cursor that I look at. This is one of the so-called indicators that I look at as well, to know that, is the market fearful? Is the market, feeling confident? All right. So this is one thing. Then you can see that it slowly flattens. As it slowly flattens, right, what is happening? As it slowly flattens, what is happening is that the money, instead of, flowing out like that, right, the shorter term one is actually going towards the longer term bonds. That is what is happening when it slowly flattens, because people continue to sell the near term. Where are they shifting into? They are slowly shifting into the longer term. So as you do more and more and more, right, there will be a point whereby it will invert and then it will come back, it will invert, it will come back, it will invert, it will come back. So exactly like what you mentioned, it doesn't stay inverted like for long. Just go down for a while and then it come back. It go down for a while, it come back. This is normal. This is very normal. Okay, so far, can you start to see money shifting? How many of you can start to see this money shift? Like implied money shift. How many of you can start to see this? Can you type me? So this is one of the things that is bothering the market right now, because the 2 years and the 10 years invert, right? So let me just give you an idea lah. Okay, you can see this invert, invert, invert. So sorry, not invert. Go flatten, flatten, flattening, 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 then finally flatten, right? Then they call this an inversion. To me, I don't think that this is really that much of an inversion. An inversion, right? It really looks something like that, right? Ridiculous one. Okay, let me find a perfect example of inversion. Something like that. This is a very clear inversion. Can you all see this? Can you all see a very clear inversion whereby your 3 years is higher than your 2 years? Maybe not lah. The 3 years is higher than your 5 years. Your 5 years is higher than your 10 years. The 10 years is higher than the 30 years. This is a very clear inversion. Can you see that? So this is a very clear one. But it doesn't stay there forever one, you know. It will come back one. So I liken it, right, to pregnancy contraction. How many of us are parents? How many of us are parents? Can you type me? Or you can type how many kids you have. You can also type how many kids you don't know that you have. So as parents, right, we will know that towards labor, towards the towards labor, we're going into labor, right? The contraction don't go the last 1-2 weeks, right? Don't contract all the way, right? I think the mother will die. Will die of pain. So the contraction comes every few hours, then goes down to every few shorter hours, then after every 20-30 minutes, then after that, when it's going into labor, then it goes down and down and down. It becomes like every 5 minutes, every 10 minutes or so. So it got shorter and shorter in terms of the frequency. So when it comes to the market throwing tantrum, the market, showing inversion, the same theory applies. You don't just go contract, then stay there and die already. No lah. It will go, it will come back. So I want to see what I am tracking is how often does it move? How often? Number one, how frequent is it now? Maybe last time used to be, 1 year, one time, never happened before. That's the first time. Then after that, normal for very long. Then the next year, happened again. Then now, instead of every year, every 9 months, every 6 months, every 3 months, that's what is happening. Okay, the inverted yield curve goes like that one. You don't just go invert all the way and you stay there. No, it doesn't work like that. Okay, so are we clear? Are we clear? Type yes if you are clear. Okay, so this is how it looks like. This is how it looks like. So let's see from 2000, the leading up to subprime. You can see normal, then it starts to flatten. Then after that, it goes into first inversion. So between the first inversion, right? If I'm not wrong, it should be the first one. Somewhere here. Okay. The first inversion, it's in March 2006. The first inversion is in March 23rd, 2006. So can you see that? Can, right? Yeah, I'm a little worried. How many, let me see how many people we have. Worried because we have 400 people and then I have less than 10 people replying me. So can you just give me some energy as well? Just help me reply to my question so that I know that most of you are along the same page. That I'm not speaking alien language that you don't understand. What are you talking? Sounds so chim, but I don't get anything. I want to make the chim things into very layman so that everybody will understand, so that you can understand it. Okay, can. So this is March 2006. Okay. March 2006. So let's look on the charts first. Okay, S&P 500. S&P 500. Where's my S&P 500? So it's over here. So March 2006, right? Let me just zoom in just to give you an idea of why I say Mai Kanjong. Okay, March 2006 is here. March 2006 is somewhere here. And from the time, right, they got the inversion. Okay, from the time they got the inversion, the market did an initial reaction. How many of you can see this reaction? Type react. Okay, type react, or if you want shorthand, just type an R for me. So how severe is this reaction? Don't know, we see. Okay, so from the top to the bottom, that's about 7%. Back then, 7% is a big thing. Today, because of the volatility, because of the QE, 7% drop. Oh, like that lor. So today, nothing much. But back then, it was a huge thing. All right, it's a huge thing. So this is always the knee-jerk reaction. But I want you to look at this. After the knee-jerk reaction, what comes after that, right to the top? Is that a glorious run? Is that like a wow? You know, like, oh, actually gone up by quite a fair bit. How many of you think that this is like not bad? Can you type wow? So, learning from this, you always have the initial reaction. Why? Because people kiasi, kiasu, I don't know why lah. Kiasi, kiasu means you scared this, you scared that. When unsure what you do, take run first. You know. So that's what usually people will react. The market participants will react. So the initial reaction to the first inversion, but after that, for how many bars, 312 bars, 451 days, is more than 1 year. You get a glorious bull run. Of course, towards the late stage, you can see that they are struggling. Okay, they're struggling finally before it topples. But the initial reaction always have a lot of legs behind it. This is the conclusion that I want you to see. And this is where really during the time of MIBS, I didn't have time to go in depth with you. So here in the booster webinar, I'd rather go in depth so that you all understand exactly what on earth is this tall hair trader talking about. Okay, so are you all getting some clarity? Are you all getting some clarity? How many of you are getting clarity? Can you just type clarity? Okay, can. Good. So this is where buy on dip now. Don't anyhow buy lah. Anyhow buy, then I tell you bye. So looking at this, the first inversion, then after that you can see it flattens, it goes back, flatten, invert. Can you see that the word? So focus on this word. Focus on this word at the bottom. All right, flat. So look at this. Just now, the initial one was here, right? So normal, flat. Then after that, invert. So go back flat. Then after that, become normal already. Before the crash, actually, it became normal. Why? Make a guess. We can see very clearly this was before the crash. This was before. But how come the curve becomes normal? Why? Can you all, Danny, buy Rolex? Hey, Rolex, the chart very nice one. Uptrend, okay? So why do you think the market, the yield curve goes back normal before the market crash? Why? Because this is the period for the institutional traders, the big boys, to do what? To do cashing out. And this is usually, sadly, where the retail traders will go in and do what? What? Oh my God, what? That's what you all do. So it can be quite entertaining sometimes, right? If I just understand this, and then I just eat popcorn, I'm like, wow, this is a disaster waiting to happen. And you all like, cheers. Wow. So history never changed. Human behavior never really changed. Every time the context will be different. Every time there will be a different instrument, a different thing. But more or less how it happens, more or less never change. So look at this. What is new in these 10 years? The things that are new in these 10 years, right, is this thing called QE, quantitative easing. That means printing money. Before subprime, this tool was not open. Before subprime, it was all about interest rate policy. Right now, it's about interest rate policy where they can increase and drop for like until they're happy. Plus, now they have QE. And QE literally took us out of COVID, like just like that. Where the money, right, they just print, and then you can see 35% drop in 19 days. After that, it came back into a multi-month rally, leading into where we are now. So looking at this, I just want to give you some clarity here. Looking at 2020, okay, looking at the chart, looking at this chart, right, going forward, where it is now, can we all see that? Okay, can we all see that the market actually broke into like all-time high? It was struggling for a while. So last year was like going. After that, it did broke into an all-time high back then in October, November. How many of us can see this? Can you type the number 10 for me? Can you just type the number 10 for me? So the market broke into an all-time high. This is S&P 500. Back in October, November 2021. So October, November 2021, where is the October, November? Somewhere here. Okay, somewhere about here lah. Okay, I just want you to see where the curve is. Okay, just track this. Let me just use another color. I think it's easier to track. You have it here, you have it here. So let me just plot the graph. Feels like secondary school. Because the last time I plot this, I think it was in secondary school or JC. So this is where the curve was, okay, last year, before the market broke into all-time high. Ever since then, right, the market broke into an all-time high. What did we see? How has the money changed? How has the money changed hands? Well, looking from where it was till now. Can you see this? Can you see that there is a shift? Right now, I'm just going to circle it. Can you see that the curve have shifted from one that is like normal uptrend, almost lah, into something that is like, going sideways a little flatter already? How many of us can see this? How many of us can see this? Type me, type yes, right? So the yield actually increase, okay? The yield increases. The yield increases. This means that people are exiting bonds. So where are they going into? Definitely not crypto lah. Don't need to see lah. They are shifting their money elsewhere, not into bonds. So this is the concrete conclusion that we can have. So when I say that, the yield increases when people are, exiting their bonds, right? Are they like very, very pessimistic, or are they like, okay? What do y'all think? That maybe not optimistic, but is it like, wow, I scared? Or is it like, hey, actually okay, what do y'all think? Based on the understanding of what you see on screen now. Okay lah, not so bad, right? Why? Because I sell bonds. If I am pessimistic, if I'm fearful, what will happen? I would all dump into bonds, ma. Because flight to safety, ma. Right now, is that the case? The answer is no. But what we are seeing is flattening of the what? Is flattening of this slowly lah. Okay, slowly it flattens lah. Will it invert? Well, the inversion that they talk about was briefly lah, the 2 years and the 10 years, right? Just briefly just went inverted. It's not even the whole curve invert, It's like part of the curve just tilt over only. That's it. Part of the curve tilt a bit. It's not even the whole curve just go down. So is that like great fear? Can you all conclude for me? Is there great fear? Yes or no in the market right now? Okay, please, everybody, just conclude this for me, because this conclusion will bring me to the next point. Not much fear, ma. Correct. Exactly. So we make use, right? As traders, we don't speculate. We don't just read the news. The news are there just to confuse us. What we want to see in the market is all based on facts lah. So currently, I think that, okay, there's not much fear going on. And even if the curve inverts, right? If the curve inverts, bear in mind, what did we see back in 2003? Sorry, 2000, where was that? 2006 March. Okay, so we have an initial reaction. Then after that, there is still a glorious run. So this is where I am thinking we are not even near the inversion, because right now we are still early. It's still flattening only. There is no mass flight to safety, because this flight to safety, you can see that when it stays flat, right? Very quickly, you can see it flat, then we start to invert, come back, invert, come back, invert, come back, invert, come back. Then you know that the contraction comes on a lot more frequent. Then you know, it's going to labor. So meaning the bubble is going to pop in that sense. But right now we are not seeing it. Okay, so is that everybody? Is that clear? So Jeffrey is asking the Shiller factor or the Warren Buffett indicator. Personally, I don't follow that two indicator, so I cannot comment that much. I share with you things that I know. Things I don't know. I mean, I'm a human too. In fact, I'm quite young as well. So there are not many things that I also don't know one. So please give me the leeway and understanding when I mean, just let me be myself. If I tell you I don't know, means I don't know. Things I know, I will share it with you. Things I don't know, I just tell you I don't use it. Is it okay? Rather than, I come out with some cock and bull story, then just to smoke you, no point, right? Okay, can or not? Can? Okay, thanks. So the two I really never use. I got use one, I will tell you what I know, but this one I really, really never use. Okay, sweet. So now looking at this, right? Currently, where is the market going to go now? Okay, where's the market going to go now? So we now know that, hey, there's no massive fear, you know. Then let's look at whether the market is overpriced. How many of you want to know the answer to this question? Is the market overpriced now? How many of you wants to know? Can you type me? Again, statistics. Again is numbers. It's not I say one. It's not because, oh, because Jay say one. How he know? Then you're like, how you know? So here I'm sharing with you exactly what I'm tracking so that even without attending my webinar, I hope that you will still attend. But even if you don't come, you also will understand what am I looking at. That's what I want for each and every one of you. Okay? Okay, well, is that a deal? Can you all put on the thinking hat? But of course, next time come lah. If not, I'm so sad. I thought that nobody want to come. Ayo, then I cry. Then all my hair drop, become botak. Okay, so okay, back to this, right? Back to this. I look at this from a PE perspective. Now, what is PE? PE is price over earnings, right? PE is price over earnings. So that means what is the price now divided by how much are you spending to get that $1 earnings. So every stock will have the price to earnings ratio. So price of the stock divided by earnings per share. That's the PE ratio. That means how much money are you spending to make $1 in short. So the PE ratio, it can be applied over to the markets as well, namely Dow Jones, different aspects of Dow Jones, or in fact, different index like Russell, like Nasdaq, like S&P 500. So this will tell us, right, in terms of ranking, what are the, what are the markets that are so-called still overvalued, still expensive, and what are considered cheap. So now, right, let me just look for a 10 years bond yield. 10 years bond yield in the US one, not mine. So 10 years bond yield, it's 2.89%. Okay, it's about 2.89%. So this is safe haven. Now, let me ask you this question. If the 10 years bond yield, it's 2.89% or 2.9%, so this is considered safe, right? If you want to move your money into something risky, should you be getting a higher than 2.9% rate or lower than 2.9% rate? Higher or lower? Higher lah. Put into safety 2.9%. Put there dangerous, I can lose money, then I make lesser. Don't make sense, right? So everyone obviously want higher. So how do we gauge what is high? We always compare. We compare to the treasury, we compare to the bonds. Hey, what's the next best alternative that we can get? Because as a money manager, you will be thinking, just like, for example, if you want to put your money with a certain bank, okay, be it their fixed D or their deposit rates or their whatever lah. So you will compare that, oh, if I put into, let's say using Singapore context, I put it into OCBC, how much am I going to get with the OCBC 365? If I put it into UOB, with the UOB one, how much am I going to get at the end of the day? How much do I need to spend? So we will compare and contrast. Then we decide that, oh, in our situation, in our scenario, hey, OCBC is better, DBS is better, or whatsoever. So when it comes to bonds and the market itself, right, what's considered like very expensive? It looks at we all look at the return. So we know that 10-year treasury is giving about 2.9%. Recently moved up quite a fair bit lah. Okay. Looking at this PE ratio, right? How do we calculate? The shortcut, right, is literally just take 100 divided by this PE ratio. 100 divided by this PE ratio. That is pretty much what is the implied yield. Okay, what is the implied yield? IY, implied yield. Is this clear with everybody? KK Chong, put in CPF. Can lah. Can lah, also can lah. You do what you do. Hey, so can everybody just let me type IY, okay? IY, the implied yield. Okay, so how do we calculate 100 divided by this PE? So we can see that, see, I prepare a calculator also. This calculator from my schooling days. You take 100 divided by 20.11. For Dow Jones, right, the implied yield is about 4.97% because you are spending $20 to make $1. In a nutshell, this is what you are saying. If you buy the Dow Jones Industrial Average companies in the same weightage as per the average, right, as per DJI, you are spending $20 to earn $1. So your implied yield, it's about, your return is about 4.97%. Okay, then we go and look at Nasdaq. So this is DJI, all the large companies. Then we go and look at the technology focus, okay, the tech focus Nasdaq 100, NDX. What is the implied yield? The implied yield, it's just 100 divided by 31.86. That's about 3.13%. 3.13%. And then we look at the S&P 500, which is generally the bigger companies, the better performing ones, because you need to have 2 consecutive earning quarters. You need to have a certain market cap. Then you can be considered to be part of the S&P 500. Okay, so that you take 100 divided by 24.82, you get an implied yield of about 4.029%. So think about this. Your 10 years bond, okay, your 10 years bond is 2.9%. If anything, if let's say the market is to go into a bad news or some shock or some sell down, please help me answer this question. Which market between Dow Jones Technology, Nasdaq and S&P 500, which one do you think will get affected the most? Can you help me answer this? Can all of you help me answer this question? If one day the market gets sell down, which market do you think will get affected the most? Nasdaq. Why? Because in terms of the risk market, which one gives you the lowest return? Nasdaq law. So if sell down, which one will kena first? Nasdaq law. So this is the reason why Nasdaq has been beaten down like the whole Q1, right? The whole Q1, if I were to compare, side by side, this is, where's my Nasdaq? My Nasdaq is here. Can you see that dollar for dollar movement on S&P 500 from the top to the bottom? It's about 13-14%. Okay. Then for Nasdaq, right, from the top, let's just take this latest top to the bottom, it's about 21%. So briefly, it was sent into the bearish territory. So why were they beaten down so badly? Why? Because before the crash, they were the most expensive. So think about this. If you want to flight to safety, right? You want to get out of something. Which one will you sell first? The cheapest thing on hand or the most expensive thing on hand that you have? Can you help me answer this question? The most expensive thing, if you, I got 10 things I want to sell. I want to get back most of my cash, right? Which one will you sell first? The most expensive one or the cheapest one? You now have what? You now have some enlightenment. You now have some, oh, okay. So can you all finally understand like why not? How many of you finally understood why? The why. Can you just help me type why in the chat? So the market, it is not that hard to understand one. The market has a certain logic behind, and the stock market is actually quite straightforward in the sense, you don't that there is numbers, there are things for you to fall back on. It's not just like, for example, crypto. How do you value crypto? For example, gold. How do you value gold? What makes gold, is it overvalued or undervalued at 1,950? How I know? I also don't know. So this is why stock market is much easier and much clearer cut once you understood all these things. Okay? So far okay, no? Clear or not? Are you all getting value out of this sharing? You can see that I'm quite enthusiastic when I share about these things. How many of you got value? Can you type value? Then I can drink some water, talk until, wow, then my voice becomes so deep. Then I can go and say, I am back. Okay, great. So this is the reason why. And if you track all this, right, you will understand one. And then once you understand, then your mind starts to reframe. Your mind starts to do what? Your mind starts to, now there is no fear. Now I think there is one more leg forward. What am I going to do? Correct or not? So you can see everything is logical. We have to lay down our fear first. The confusion, we have to lay it down first. If not, we will not have the confidence to trade. You know, like, wow, the news, wow, I buy, I scared. Wow, you see Netflix, wow, to drop. I mean, there's earnings, but hey, we calm ourselves down first to get the strategic direction first, to get the bias. And this is all the preparation work that goes behind before you even take the trade. And this is the part that a lot of traders just, hiya, I don't need to look at this lah. It's like, why? You have to prep ma, correct or not? Before you cook, you have to buy all the ingredients, right? Then you prep all the ingredients before you cook, what? So during the cook show, all you see is, wow, cha, cha, cha. You see the fire, you see, wow, the sizzling. Hey, but beforehand, before they even camera roll action, right, they have got to do all the chopping, all the preparation, all the seasoning, so that when it comes out, it's a proper dish, right? This is what we do behind the scenes that you don't see. Now, you are part of the behind the scenes. So now you can do or not? Hiya, Uncle Roger, nieces and nephew, you make me so angry. I put down my leg. Ian can cook, so can you. I cannot cook. The only thing I cook is white rice. Sometimes it comes porridge. Yes, yeah, just grab lah. So easy. Okay, so now y'all can see, right? So among, if let's say today you want to be looking for value, okay, today you want to looking not the session whether got value. You want to look for value buys. Don't buy C limited lah. Wapiang C limited macam submarine already, you know. Okay, why I'm so agitated? Because every time people ask me about C limited can buy or not? Can lah. You just buy lah. You just buy. You take my hair, right? You invert the other way. That's where C limited is now. You just buy. I give you thumbs up. I clap for you. Why you gonna buy that kind of thing? So, aiyo, this one really, hiya, cannot tahan anymore. So, don't buy this kind of thing. Buy what? Buy what? You know, how many of you want to know buy what? How many of you want to know? Can you type me? Okay, buy what? Which is the cheapest? See, I question you back, right? So if you want value, look for the cheaper area, the cheaper segment, if you want longer term value. Because I see Ivy asked this question right before we start, and I think 7 of you upvote this, right? What is the top US stocks to hold long? I cannot tell you what to buy lah, but have I answered this question? Now do you all know what to look at, where to look at for long term, like got some value? This is the part 1. Later part 2 I share with you. Y'all can see the can have I answered that question already? Yes or no? Okay, look at the P ratio, then you slowly see lah. Okay, I think S&P 500 is still okay. Dow Jones is still okay. But what companies within the Dow Jones? That's where we have the part 1 already. Now we know buy what, right? Now we know buy what, buy where, Then the second thing is the prices also have to agree lah. If the prices don't agree, meaning if this thing is coming down, you die want to go and buy. Can or not? Not so nice lah. I will never tell you cannot, because it's your money, but not so good lah. Your chances are always better with the flow, because with the flow, if you want to buy, then you are going on the right side of the trend, especially if you're talking about long term. So that Ivy's question. So far, that question, are we clear? So part 1, buy what? You all know what to look at. Part 2, the prices must agree. Can or not? Type okay if you understood my hint. I cannot tell you what to buy, but I can hint. You all can see, right? Okay, can. Now, wait, let me adjust my aircon a little bit. It's getting too cold. What's my hint? Wapiang. I tell you already, it's not hint already. Number one, look for the most, if you want to say what is the long US stocks to hold long, okay? Look at where this first, number one, then you find the area, then after that, make sure the prices agree. Okay, make sure the prices agree. You certainly don't just jump into Nasdaq knowing that anything that trigger the market to come down, this will be the first market to get hit. This is definitely the first market to get hit. So don't buy this kind of thing lah. Just something else lah. Here also okay ma, here also okay ma. Then go and look lah. Can wing at you already. Okay, so so far, hey, you're okay, bro. Are y'all getting some entertainment value out of this? How many of you got some entertainment value? And I don't like to be too prim and proper. I think you all listen until I just finish work. I hear this guy just neck, chanting like that. I fall asleep. So I tell you some jokes. I use the layman example. So even sophisticated thing like that, I hope you can understand. Okay, can some Nasdaq stocks are also S&P 500 stock. Yes. So go ahead and look at those lah. The many ma. Okay, so this is one. And then this is what I do lah. I think most of you will know you are my students anyway. There's swimtraining.com. You can go and see for yourself. All right, so the yield curve, the PE ratio, done already. Now, where is the segment or what price am I looking at? So I will share with you the price I'm looking at for the market. Okay, so now, how many of you want to know whether this market is real one or not? Like this reversal, will it go up or not? How many of you want to know this? Can you type me? How many of you want to know this? All right. I do think that the market, I'm going to be very objective. Okay, I'm just going to be very objective. If you ask me, like, will I know for sure? I don't know, but I think my students can attest to the fact that I think quite soon now. Not too far off lah. Okay, so hey, how many of you are from my community? Have so far the levels and all that I share with you all, is it soon or not? Is it soon or not? Like, in the graduates Facebook group, I did like a 10-pointer thing. It got really go to those level. Not bad, right? So and then y'all just CC. This, how do I know? Honestly, I don't know. I have no idea. Okay, I have no idea. I just know to read the market psychology based on charts. I just know how to interpret that. And yeah, and that's what I'm looking at. So I do think that the market, it's in a new phase. It's no longer in that, this downtrend of Q1. I don't think so. Does it mean that it will, always go up? Like literally you expect it to just clear like that? I don't think so as well. Last year, the market has already shown us, right? If you buy the breakout, you will be quite painful. So if you just buy the first breakout and then, wow, you're so happy, right? You make you happy for 2-3 days, then the prices drop down. How many of you experienced this in 2021? Can you type me? Can you type me? Exactly. So last year, the market has really shown us a lot of all this already. And I vividly remember, I said, whoever that buy this breakout is going to suffer. I think quite pain. So I didn't know it's going to correct until this fears. Honestly, I didn't know that. But why I say that don't buy the breakout back then was because the whole year, the market just show us one thing, you break out, you buy, you die. You break out, you buy, you die. That's what the market is saying, right? See, you break out, you buy, you die. Then you break out, you buy, you die lah. So this is something that's ongoing the whole year. So this year, market come down. I think it broke out, and this is now in a new range. Okay, moving forward to the right side, here will be a new market range lah. So what kind of range? Well, I do think that the sideways to upside is higher as compared to the downside. Personal views. Okay, personal view is that the upside to sideways has a lot higher chance rather than down. Down, maybe not so much. Okay, so what are the levels that I look at for a reaction? What are the levels that I look at for a reaction? Over here. So this is the areas lah. So you can see that the prices comes down. The last frontier I'm looking at is 4345. As of now lah, applicable to today's context. 4345. I think that this level should hold. Why? Because previously it was a base. Previously it was a very, very nice base. It was a nice area where, you know, the transactions, the movements happen. It is all in a nice area like this, whether it got rejected towards downside or upside. Then after that over here, that's where you see that I do think that it comes down as 4345. That's where I want to see it holding. Okay, can everybody type 4345? Can everybody type that? Good. Then I will only be, you know, momentum swinging towards bullish, right? When what? When it go above this area. When it goes above this area. 4470, 4480 lah. 4470, 4480. Okay, I will only consider taking a momentum swing long, even in the stocks that I'm looking at, when it crosses above this area. How many of you want to know why? Can you type why? How many of you want to know? Saturday or 40 number, go and buy. You win already. You treat me for lunch. Okay, so why? Can you see that this is the last base? Wherever this attack was, right? Okay, the best attack. So the money come down, then it consolidated for a while. Can you see that this is a base before it broke down? How many of you can see this? Type me. Market Asia. Okay, right. Tell me why. Tell me why. Sorry, that was my era song. Backstreet Boys, yes. When I sing, it become Backside Boys. Little rain. Okay, so the prices comes down, right? This is the last base. You all can see this, right? So naturally, as it launches itself downwards and it failed to go down lower, and if it recovers, where do you think they will return to? Or the notion that, oh, they are defending. Obviously here lah, 4480 plus minus lah, like 4470, 4485 plus minus lah. So 4480, the box there lah, they're obviously going to defend this area. You know, 4480 area. Because if it launches itself down, no follow through leh. Then how? Then after that you come back, right? If the bears, okay, think in terms of the bears, if you have short sold this, if you have substantial position into, well, I want to short sell this thing, where will you defend? If you have launched yourself, your attack here, right, you will definitely defend it when it comes here. This tells me how strong the bears are. How strong the bears are, right? So right now, it's about 4480. Yeah, lah, to pre-market. No, lah, pre-market here, lah. Where is it now, lah? My charts are live one. I got live data pricing for S&P 500. So now this is live, lah. So tonight or tomorrow, we will roughly be able to know, okay, can it break through? So if we want it to go higher, I want it to clear this level first. As it clears this level, this gives me more conviction to go long, to go forward. Are we clear? How many of us are clear right now? That means you are clear on what is to expect for the downside, what is to expect for the upside, and these are the two areas that I'm looking for a reaction. Is this clear with everybody? If it's clear, can you just tell me type clear? Very clear, huh? Can, huh? That's what I want. So does that mean I just close above? Well, for my students, you have the AEP setup, right? You know, the AEP swing. Just wait for it to clear this level first. Then you have a change of trend sig high. Then you are able to wait for your reverse bar. Then you are able to get for, you know, the strategy, and then you are able to, can or not? Can trade or not? Can you start to see this already? Can or not? So what I'm doing is to lay it into different phases, breaking it down so that you will understand, like, you know, how to take action and whether should you be even taking action in the first place. Okay. So is it 200? Hongju. After passing 4480, will it retest again? Any possibility? Yeah, of course. Of course, like it must retest. Like, I don't retest, I also scared. You think what one line up? Cannot. Cannot one line up. Okay. So where are some of the strong sectors? Where are some of the strong sectors? Now, can I ask for a small favor? Can I ask for a small favor? Is it okay for me to share with you how you can take action on all these strong sectors? How many of you wants to know these strong sectors? Can you type me? So my students will know how to take advantage of this. For some of you that are not, is it okay for me to share with you how you can get access to these strategies? Is it okay? If it's okay with you, can you type okay? Okay, can? Can. So my students will know how to do it. But if let's say you're thinking, hey, but I'm not a student, then how? Then let me share with you how you can get into my community as well. Okay, can. If you at any one point in time you don't want to listen, leave the room. It's okay. Okay, can. Okay, now. So where are the strong sectors? There are a couple of sectors that I'm looking at. Okay, couple of sectors I'm going to share with you on the chart right now. XOP and the constituent stocks. So just now, I think one of you were asking, let me see. By Hongju, in fact, which ETF is promising in the second half of this year? Well, I don't know, but what I know is what ETF is promising now. How do you take action of it now? Okay, so the stronger ones, right? Number one, XOP. This is oil and gas production, explorer production. These are very, very strong. My students, can you see setups along the way? Can you see that there are actually quite a fair bit of setups along the way in this strong stock, even right now? How many of you that are my students, you can see this? Can you type me? Can see, right? So you know how to take action, right? I'm not asking you to buy the high. I'm asking you to wait for the correct conditions. Don't chase. Okay, don't go and anyhow chase, go and buy now lah. Then not so nice ma. Okay, then another one that I think is strong is this. Okay, this is again very strong. So amidst a very weak market, right? Are there segments that are strong? Yes, there will always be strong segments. So my focus. So let me just clarify with you all first. My focus, right? It's always to focus on this strong segments. Can everybody type the word strong? Can everybody just type the word strong? Don't type stongs. Okay, I focus on this strong segment. Therefore, right, if you ask me, Jay, what about Netflix? For me, I tell you what I can say is, ever since the drop from October, November last year, why are you still looking at this stock? It's like it's not even a strong stock. In fact, it's kind of cui. It's really like a very cui, very lousy stock now. Even before the gap down. So gap down now, I think today the market is going to get down even further. So I think it dropped by how many percent? 20 something percent, I think. So it's going to get down like way even further. 27%. Where is that going to be? Is this surprising? Well, the previous time already dropped 22%. So is it surprising? Not really lah. Just like that lor. So am I good at buying this kind of so-called value stocks? The answer is no. Don't ask me about Netflix. Don't ask me about whether Alibaba can buy. For me, I suck at this kind of stock. So please give me that. Please allow me to just be very candid and tell you what I'm not good at. I'm not good at buying all this kind of value stock and hold long term. Not my style. What I'm good at, it is to take advantage of strong stocks like this. Okay, is to take advantage of strong sectors. Like even this one recently is coming back. Okay, this is coming back. And I think this sector is coming back. Or I have them in a watch list. So all these are very strong. How many of you see that? Wow. How many of you agree that if let's say you buy this kind of stock, right, versus you go and buy, let's say Netflix, how many of you think that something like this, which is this is PBJ versus Netflix, this kind of company, which one do you think is easier? PBJ 1 or Netflix 2? Which one do you think is easier to trade? Exactly. So why make your job tougher? Why make your job so hard that I die must buy Netflix? I die must buy C Limited. I was like, ayo, go with the money lah. Ayo, the money flow in all these areas. You don't buy, you buy this kind of go submarine one. What piang? That's all I can say. Oh, what piang? Hey, really? Every time I see, I'm like, I shake head, I scratch head, I shake head until strong stock. Y'all don't buy, y'all go and buy this kind of very interesting stock. Oh, y'all interesting, very cute. So, what is piang? What piang? How do I understand? This is so Singlish. Oh my God, how do I explain this? What is what piang? What piang means, why you like that? Hopefully I put it in a very concise way. Why like that? Okay. Yeah. Oh my God. Yes, exactly. Okay. So now you all know that these are the strong stocks. For example, real estate, PBJ is the strong stocks. Okay. How many of you want to know how to take advantage of this? Hey, my students, you all know already lah. Come on lah. But let's say lah, people who are not my students tonight, how many of you want to take advantage of this? Can you type me in the chat? Can you just type me? Exactly like what Hongju said. Why you like that one? Okay, so is it okay for me to share with you how you can get into my community and what exactly I'm going to share with you in the program, right? So that you are able to take advantage of stocks like this. Is it okay? If it's okay, if I have your permission, can you type okay? And if you are, if you like don't want to listen or what, you can leave the room. It's okay. Okay? Can So this is, of course, as a follow-up to the Market Insights Virtual Summit that time as well, because back then, I think we didn't have much time to talk about the offer. So tonight, right, please give me another about 15, 20 minutes. Let me share with you what exactly this offer is about. So this offer, right, it is launched in conjunction with Market Insights Virtual Summit together with Alex. And this program, right, it's called the AEP program. It's a brand new program that I've created this year as a follow-up to the e-program that I have last year. So for last year, in fact, the last 2 years, it's like a version 1 thing lah. Okay, a version 1, right? The strategy was TPB. So this year, because of the evolving market, some of you, I want to bring this up because some of you were from the previous e-course. So this program is called AEP. Can everybody type AEP? The Art of Explosive Profits, AEP. Sounds a bit corny, but the keyword here is explosive. So it's something like a version 2, right? So this version 2 in this AEP, what is it exactly used for? It allows us, right, to capture explosive trend. Why explosive trend? Because the market for this year, expressively told us this. If you want to hold for those 3 months, if you want to hold for those 6 months or 9 months, you will have to experience a lot of heartache in between. Okay? A lot of heartache in between. Well, Edric, you're from TVB. Should you join? Well, let me share with you what's the difference. You decide from here. Okay? You decide yourself. Now, how many of you will agree that if now in the market condition, right, given that it is so volatile, given that it is so uncertain, if you hold a position for, a couple of weeks, you feel very stressed. How many of you agree with this? If you feel that you think that you'll be stressed, can you type me? Right. So that's where, right? That's where this whole new framework that I'm using, where I put it into this program, the Art of Explosive Profits program, the AEP program, allows you to capture those that are few days, so that you are not opening yourself up to this kind of, wow, I want to capture the long trend. Because right now it's typhoon, you put your kite, expect to fly long, what you're going to get is your kite, the string will snap and your kite will fly away. Not like 2 years back, oh, it's a very steady wind. Then your kite can go higher and higher. Today, it's about so it goes up, catch a little bit, you have to pull back. That's what this whole program is designed for. Are we all clear? If you are clear, can you just help me type clear? Good. So this is the main difference between the so-called the version 1 and this version 2, because this version 2, it is purely adapted to what the market condition is today. Okay. And it allows you, right, to chase, so-called chase that kind of sky high trend safely. Just like just now, what you have seen in PBJ, what you have seen in XOP. Am I asking you to like, wow, right now so high, you buy exactly at a high? The answer is no. Like for example, just now on S&P 500, I said 4,480. Does that mean that once break 4480, I immediately buy? The answer is no. We have to wait for the setup. We have to wait for the strategy. So by sharing with you the strategy, the swing strategy in this program, it allows you to get in on this kind of sky high or strong trend safely. That's the whole purpose. That is very, very customized to today's market. Okay. So what happened that it changes? Well, we have been applying this strategy throughout the past 2 years as well. So, you know, there are some things like, for example, if you chopstick, right? Chopstick, you can eat rice, you can eat noodle, but you cannot use chopstick to drink soup. All right. This is more like a spoon, whereby you can use a spoon to eat rice, like 2 years back, the market. And this year now, the market becomes soup, right? You can use the same spoon to go and drink also. You get what I'm saying? So it is more versatile in a way. And most importantly, right, it locks your exposure, it limits your exposure to this market so that you are not open to all those overnight volatility as well as all the uncertainty. Because this year, God knows what will happen. Sekarang you hold until damn song. Then sekarang you see Netflix come down. Walao. Then Russia fire one more missile. Walao. Then the whole thing just down. So this year, it's a very, very different year. And how exactly we can deal with it, I feel it is through, you know, proper adjusting of your frame, your mindset as well. And most importantly, to avoid the false breakouts. So whatever that I have displayed to you just now through the understanding of technical analysis, these are the things that I cover in the program as well, so that you will understand how to avoid this kind of heartache. Wow, the first one, you're so happy, you go and buy, then after that, come down, then you, hey, why like that? So all are included. All these things that I used just now is all shared within the program itself. Okay. And most importantly, how do you know where are the turning points? Like just now, I mentioned on the S&P 500, on the upside is 4480, on the downside is 4345, right? How do I know all this? This is where I will also share with you in the program. Okay. So it is a rule-based discretionary program, allow you to catch the explosive trend, and I'm applying it to the US market. I'm also applying it to the crypto market personally. But in the program, I only focus on US stocks. So are we clear? If you are clear, can you just help me type yes? If you are clear, can you just help me type yes? Just in case, you know, can I apply to Hong Kong stock? Can. Can I apply to Singapore stock? Can. Can you apply to Malaysia stock? Can. But finding out the stocks is a challenge. So I am applying it to US stocks because US, there is plenty of strong stocks. Regardless of where the market is going, overall, there is still strong segments, very, very strong spots. Okay. So discretionary rule-based means that it is not auto trading. You still have to do the trade yourself, but you are guided by a stringent set of rules. Then you will exactly know how to place your entry. You will know exactly how to place your exit, your stop loss. Okay. Your exit in terms of your target and your exit in terms of the stop loss. So this should give you a framework to clear up some confusion. How many of you are afraid, right? Like, you know, if you go into the trade, you know how to enter, but you don't know how to get out. And usually you see your winnings become losses. How many of you have experienced this before? Can you type me? If you have experienced your winnings go into losses, that's because it's not that you don't know how to enter. Most of us are good with our entry. Usually when we enter, it's quite okay, man, but we just don't know how to exit. So that's where, right, in using this, in this AEP program, I will also share with you how you can have a target profit and what should you do when your prices approach the target profit so that you are reducing your risk. You will unlikely turn a win into a loss because we must keep the money we make, ma. If not, we make already, wow, so happy, then everything give back. Then for what? Then you make already also, like, don't make lah, same thing ma. So now, Edric, does AEP work hand in hand with TVB? The answer is yes, because TVB, it's a mechanical rule. That one's a very mechanical, literally you're following the indicator, you hit, you enter, and then after you get out. This is more discretionary with a little bit more understanding, so you can build it on top of your understanding of the TVB. All right. So over here, just now I see how long, how long is this program? What, what's the enrollment like? So this program is 100% online. It is an e-course. So should you enroll tonight, you will have access to it immediately. That's what my backend system is doing. Once you enroll, my backend system will send you an email, then you will have access to it and you can learn it, like immediately. So you can access it anywhere in the world, anytime you want. So it's 24/7. And it gives you the framework, right? Again, I must stress this enough to capture the strong move, because regardless of what the market is doing, you will have strong moves like this. You will have upside. There is a swing buy, and then there is also a swing. There's also a short sell framework in it. Okay, so that we are not just, I only buy. I'm only talking about buying now because the current buyers of the market, we have derived that we are not going to short sell, because right now everything is turning over. There is no fear, and there is no new things that are pushing the market down. That's why we are focusing on a buy. But that doesn't mean that we should only know how to do buying. We should also be versatile enough to do selling. How many of you agree with this? Can you type yes? Okay, good. So Daphne, does this supersede the TVB? Well, like I said, TVB is a version 1. That this one is a version 2 that you can apply on top of it. And it is not the same. It is discretionary on top with the understanding, so that you are able to get into much shorter trades. Because for TVB, usually sometimes the trade is about 1-2 weeks, sometimes a couple of days. This one is slightly shorter a little bit, 3-5 days. You hit your target, then in it, I will share with you exactly what to do when you hit your target. Okay, so can you use the AEP for the weekly stock list? Yes, which is what I'm about to share. So over here, the one robust swing strategy, right? You are able to do adjustment. You are able to initiate first, then after that adjust. Okay, initiate, then adjust. So it is one swing strategy put into 2 segments. Like, okay, once I see this, I'm going to initiate my trading. Then after that, I see, okay, as the prices come down lower, what am I going to do? So that's where the adjustment comes from. So in the program itself, right, you will see all this various chapters. So let me just show it to you. I think it's easier. This is the portal itself, where you can see the AAP program over here. Painstakingly put together 15 lessons. So each lesson, right, it's bite-sized, apart from what? Apart from the main course. Okay, the main course like PASD strategy long. See lah, I need to log in myself. So let me just log in first. Do not stay in there too long. They got locked out. Okay, so this main strategy, lesson 10, you can see this lesson 10 is slightly longer. It's about an hour. So I share with you exactly what you should be doing, taking action. And then of course, there's practical session as well. So once you have the practical session, you know how to apply what you have just learned. And one of the comments I gotten from the past attendee, right, is that this one feels like a live course. So like that, lor. So these are the things that you will be learning. Okay, how do you chart your way to success, to find the key levels, the hidden levels, the PAST long strategy, the short strategy, and how to size it, and most importantly, how to take action. So it's a complete course that is not like, hey, this one is just a teaser, then you have to sign up for something else. To me, it's no. This is a entirely working course already. With this, you will know how to take action immediately. That's the beauty. Okay? Because I know some of you are afraid of, is this just a teaser? Is it like a not completed one? Then I have to buy something else later? No, this is not my style. And later you ask Alex, okay? Alex you have seen me to do this for a couple of years. So I don't do any of those things. Now, what you will get, it's the Facebook group, okay? Whatever that you see up there, right? Okay, this is in a Facebook group. This is the community Telegram channel where you'll be updated with the news, updated with the latest development, but the value, okay, like all this, right, the value is all in this Facebook group. So this is a closed Facebook group that is only for students only, okay, only for students, okay, only for students. And within the program, I also give you this trading plan template whereby you can fill up certain parameter, then you know where your entry, where your exit are. So this one really gives you a lot more clear cut on your entry, a lot more clear cut on your sizing, etc. So it helps you to save time, to reduce the errors as well. So this is the whole purpose of having a trading plan template, like, just to make your life easier. How many of you will prefer an easier journey when it comes to trading? Or you're like, wow, I need to crunch number and all that. How many of you prefer an easier journey? Can you type me? Yeah, so this is why I design all these things to make your life easier, because my initial journey myself as a independent trader, it wasn't easy. First couple of years, I can genuinely share with you, first 3 years is really, I really just eat grass, eat grass, eat wind, eat everything except making money. So the only thing is I managed to last through because I started very, very young. I started at age 22. Today I am 35. So that is my only advantage, if any, right? So, and like yourself, right? I am also a human. I want to understand certain things that goes behind. Therefore, right, in all the webinars, in all the times that you see me, I want to equip you all with what? With the knowledge of what am I exactly looking at, what am I exactly thinking. So I don't just want to give you the thing. I can give it to you, but I also want you to understand how to use it so that you will make the best use out of it. So this has been my style that is, throughout, just consistent throughout. So these are some of the, I think I've seen one question is, so what's the winning percentage of trades? Well, for this year, it's quite reasonable, provided when it's at the recommended profit level, you got take. This year is quite okay. This year is really, really quite okay. You can see that this is, I think, one of our new students this year. This is during March. ADM, MCK, the Freeport McMoran, McKesson, Oxy, all these are great trades. Why? Because every week, right, I do share the list with them. Okay, every week I do share the list with them, and this is what I have. So you can see that this is the Facebook group. Mine is a small group, and you can see over here. Let me just go over to the discussion. Every single week, right? Behind, you can ask me questions over there. And of course, every week I do send out the list. Like this week, right? This week's the list is IQV. I'm looking at SPY. I'm looking for Enphase, PLD, MBSD, NOC, WM, etc. So every week I provide this list so that you don't have to be looking all over the place. In the program, I do teach you how to find. But I also, on top of it, right, if I spot something good, then I share on top of what you learn in the program. So this is really, really just to make your life, your journey easier. It saves you a lot of time. How many of you will appreciate this? Can you type me? If you can appreciate a weekly list like that from a community that is really a close-knitted one, quite a small one, can you type me? All right, so exactly this is what I do. And my students, I think you can attest to this. Have I been sending this list every single week? Or is it like, sometimes I send, sometimes I don't send? Well, please help me answer. Every single week. Even Minghan down with COVID, he also helped me do it. So exactly, thank you, Kayang. Exactly, every single week. So you will be part of this community with the support in the Facebook group that gives you basically all those things that you're looking for. So Arvin, you can see he captured quite a few good trades as well. And I think most of you are, I'm no stranger to most of you. So you can see that this is the version 1 of the course, okay? The version 1, like TPB. So as it evolves over to the AEP, right, you can see the version 1, how has it done, what has it done for some of my students. Like Jennifer, every time I make fun of her, I call her Amma because she has a very cute grandson. So, my favorite counter was Target, Costco, so I shared with them. He, at the moment, I don't know what she do. She just go into these 2 trades, and then after that she said, hey, the profit can cover the cost fee. And of course, why? Is because my cost fee is not high. It doesn't cost you an arm and leg, or it doesn't even cost you a finger. So this is from Horace, one of my students. Now currently in very active in the community. So this is what he has done with some of the lists, the stocks that I have shared in the list as well. So this is what he has done. And yeah, practically, this is Ed. So Ed mentioned, thanks for the very funny AP program. It felt like it was a live class. So although we are bounded by technology, I feel that we should not be a very, I just talk, chanting on, and you fall asleep. I always like to engage. So in a program, I mean, you've gone through it, you know that it's as if I'm talking to you, okay? And yeah, that's what he says. Okay, so Yeah. So I believe people will benefit is coaches sharing and share freely without holding back. I'm sure the community coaches will clear a doubt. Yeah, and you bug us quite frequently. Please don't say that. I always welcome questions, honestly. And that's why, right, I maintain a community for my students because I know that how hard it is, right, to have a question and you have nobody to ask. Then you're like, hey, how I got a question. I don't know how. I cannot take action because a question comes from a doubt. A doubt has to be clarified. Then you can take action. Because if not, right, you'll just be stuck there. Lah. So that's why I'm doing all this. It's really more for my passion of liking to do all this rather than anything else. Lah. Okay, so far, are we clear? If you are clear, if everybody clear, can you just help me type clear? Can everybody just help me type clear? Oh yeah, Arvin is here. Adrian, is the access to the e-program permanent? Yes. Everything else, yes, it is permanent. It is lifetime there. So once you have access to it, it is here. Okay. So yeah, this is Arvin. Then am I a scam? Well, you go and think lah. I don't want to say much lah. You think I'm a scam? I'm a scam. So because somebody should ask this question before. So and this is what the student himself say lah. Okay. So let me summarize out. Okay, will there be short trades? Broker, well, you are doing Singapore stocks, right? Singapore stocks, then you can only do it through CFDs. But we are doing majority on the US stocks, so shorting is not a problem as well. Valerie, is there like an annual fee, a program fee that you have to pay? Well, let me share with you what you will get. Now, let me summarize everything nicely for you. Number one, you will get the Art of Explosive program, the e-program access, which is at 1097. Okay, valid at 1097. This is where I share with you, nothing held back. How do you catch on this explosive trend? And this is an e-program of which you have just seen that comes with 24/7 access. Okay, so this is an e-program, 24/7 access. And once you have access to it, you have access to it. I won't cut you off halfway or whatever. If there are any updates along the way, you will also be updated. That's my style of doing things. I don't believe in leaving people behind. That's my style. Okay, you may not believe me, but hey, my students, have I left you all behind? Once I've got updates and all that, did I provide the updates to you all? Please help me answer this question. Okay, so see it from my students. No hidden fee. Only secret my hair. Yeah, this one trade secret. This one I cannot teach you. My hair is 8.5 cm. This one I cannot teach you all. Every single week, you have, once you are in this Facebook group, right, you will have, obviously, can ask questions. Weekly trade list, ad hoc market update webinar will all be, provided in this Facebook group. I don't have something that is regular for my e-course, but whenever I see something that is important, okay, then that's where I will do a market update webinar. So the last webinar I think we did, right? The last webinar I think we did was, you can see what some of them say lah. Like this was the last one. This was done in conjunction together with Philip Securities. So you can see that, yeah, what are some of the attendees, what they say. So I do provide quite tiny update. And when was this? This was literally just 1 week ago. And I'm not showing you something from last year. This was literally just 1 week ago. So you can see what they say lah. Great sharing, hope to attend more such events, great session, blah, blah, blah. For those people having trouble, join me for some conviction. Oh, well, yeah. So what I do share in all these events is really the thought process, because I believe in not just giving you the fish, but also sharing with you why this fish is better, why I am doing this, so that you are self-sufficient. Once you are self-sufficient, I have done my job. Okay, I have done my job. Once you are self-sufficient, that's my aim for everybody, right? So this is what you get. Community Telegram channel, right? It's really to give you the news, the updates, but the highlight, the key, it's really in this Facebook group, because that's where you get all the value. Okay, is this Facebook group for lifetime? The answer is yes. I don't kick you out. I don't charge like subscription every year. I don't do that. And all the trading plan, the e-resources are all inside the portal. All this are provided. So this is the deal that you are getting. Okay, so far, are you clear? Type yes if you are clear. If you're very clear, can you just type yes? So Valerie, will you be able to come up with your weekly list subsequently? Yes, using the approach that I share with you in the program. Okay, the top-down approach, you will be able to do it yourself for sure. Okay, but of course, on top of it, every single week I give it to you also, so that you have a reference. You have, like, oh, okay, this is what Jay has come up with. These are all the extra ones. Okay, so thank you, Dan. Thank you, Chai Sing. So to get access to this community, right? This is what we are doing today. I can extend the offer of 45% off. Okay, I will extend the offer of 45% off using this link. Okay, so later you will see in the Zoom chat, Alex will help me post this link. AEPMWA. Okay, AEP, the art of explosive profits. MarketWise Asia, MWA. Okay, so use this promo code. Please use the promo code, because you don't apply the promo code, you'll be charged the full price of 897. Please don't do that. Just take the savings, use this savings, go and fund into your account, go and take this money and trade, and then make back the cost fees from there. Okay, so far, are we clear? Is it clear, everybody? If you are clear so far on what you will be getting, can you just have me type yes? Can you just have me type yes? Okay. So this is what I have for you. And I hope to see you in the community, because I think quite a lot of students are here today. They have attested to what I've done. I don't want to own self, say own self. I think they are not so nice. You look at what they type, listen to them, because they are the one that have enrolled, that their experience counts more than what I think of myself. Whatever I think of myself is useless. No, nothing. Okay, so thanks, Shin Hok. Thank you. So Alex, yes, welcome back.
All right, so I'm back again. So once again, Jay has already extended his time. Now it's already 9:45 p.m. already, but it is okay. Okay, I think Jay always provide a lot of value to the session. Okay, a lot of content about U-curve, the implied yield and such. So I think we have quite a number of questions over here in the Q&A tab. So let's take a look. So once again, if you have any question, why not we just upvote some of the questions that's really listed there, and see which are the most popular, and then we try to answer this question. Okay, so okay, so right now we have this, okay, by Ivy. We can see that there's 7 upvote. What is the top 5 US stock to hold long?
This one I answered just now.
Okay, so
yes.
What Jay said, right? He doesn't really answer, doesn't really hold so long, right? So he also doesn't know how to answer you this question. Okay, he's not a value investor and all this stuff. Okay, how about we rephrase this question? Okay, just now you were mentioned about some of the ETF, right? SOP, PBJ. So why not we focus on some of the top few stocks that you are actually looking at right now? I think that would be a better question to ask, right?
Yeah. Okay, so guys, you all hold on your question. I see that recording will be available after this. TVB students, is there any and blah blah blah. So the enrollment, just give me a while. Let me answer the question. Okay. So by looking at the sectors, so I use top 5 sectors. Well, the sectors that I think are strong right now, okay, which is what you see on screen. Let me see how many charts can I put up. I can probably put up I think 6 of them are good enough lah. So real estate is one. This staples, I think this is another one that is very strong. Then you also have uranium. I would say this is grade 2 lah. It's not like a very, very strong lah, but it's like a grade 2 kind of trend lah. All right. Then another one is PBJ. These are all the very strong areas that you can be looking at. Look at today, now 9:47 market open, it even gapped up some more. Food and beverage. So what are some of the stocks? Well, if you go and dig out, right, what is in PBJ? What is the constituents of PBJ? I think you have a very good idea. Let's say ETF.com/PBJ. I think immediately you will be able to see what are the strong the constituent stocks in there. So once you have this approach, right, guess what? You run into a very big problem. You know what's the problem? Not enough money, honestly. Can I only name 5? I don't think it's just only 5. You got a lot, You look at ADM. ADM is not on the news. It's never on the news. But you know how strong ADM is? Look at this. ADM, I was in there for a while already. Okay, I was in for a while since last year, about close to the Thanksgiving period. So yeah, that was sometime in November. This is one damn strong stocks. So Can find or not? Can. How to take advantage of it? That's what the AEP can do lah. Okay. So PepsiCo, Hershey, all this Coca-Cola, even Coca-Cola is quite up there right now. So KO is like it's moving. I think Pepsi, PEP, all these are quite strong. Hey, in fact, this one got AEP set up over here. Then yeah, pretty much you get an idea, right? So I taught you how to fish, right? Partly lah. So you're going to take a look lah. Okay, so I've answered that question. And then I think, let me see, what's another question? Another question is by Henry. Netflix tanked 30%.
I think you answered that question already also. No, why do you have to choose Netflix?
Yeah. Why buy this? Ayo, so many other things to buy that kind lah. Don't buy this lah. Wapiang.
All right. So Ross is saying, when you say take action, are you using stocks or options?
Okay. When you are using options, provided you know how to use options, okay. So to clarify, does the AEP cover options? The answer is no, because options to me is an instrument. So like for example, if you want general direction long, you can buy call, or you want general short direction, you can go and buy put. Okay, that's one way of looking at it. But I'm not focusing so much on the instrument. I'm focusing on what should you do with this instrument in the first place. If I have a fork, if I have a spoon, where do I find my mee goreng? Where do I find my nasi goreng? Where do I find my fried rice? That's the whole key. Once I find already, then I think, I can also use fork to eat, which is like using stocks. I can also use spoon, which is like using CFD, or I can use chopstick to eat also. No problem. That one is like using options, for example. So just to clarify, the perspective that I'm coming in from and what exactly you are getting yourself into. Okay.
Okay, so Pat Leong is asking, does the program have proprietary indicators to execute a trade? Okay, I know the answer. The answer is no. Okay, now you can elaborate more on that. Okay.
The answer is no. Because for this AEP, right, it is I do provide a very clear framework in a sense. How do we identify, number one, a strong trend? What are we going to do with a strong trend? What are the conditions to wait for? And you are coupled together with a trading plan that helps you key in. You just follow exactly as what I do in the lesson, right? You key in, the high, the low, and things like that. Then the entry, everything will come out. Your entry, your target, all the things will come out. So it's literally like piecing up a trading plan together rather than got arrow buy lah, got arrow sell, that kind of thing lah. I think that one is very, very arbitrary lah. Like we are all smarter than this lah.
All right, so maybe we'll answer one more question before we go into some of the cost question, okay? So by CK Chang, right? So yesterday, the US market went up while materials and the energy stocks actually dropped. So are we seeing the end of materials and the oil and gas stock run?
Materials, let's say I'm looking at XLB, right? And if anything, if I look at the relative strength of XLB, it is still on an uptrend. So this is definitely still strong. Is this the end? Okay, is XLB the end? I looking at the price, I think that we have hit a resistance. Again, what I meant to say here is, well, I know that whether it will turn down or not, the answer is no. I have no idea, but I do think that the upside is limited. Even you have a little bit of upside, it's about $92, which is somewhere around here. So you have to, go and juggle whether your reward, does it make sense or not? If you still want to get in now versus the risk that you are putting in, how far away it is. So this is a real question that you have to answer for yourself. Maybe you will be happy with taking, earn 50 cents, then I risk $1. Maybe you will be happy. Maybe I'm not. So this is what you have to ask yourself, logically, and so that to come to the conclusion.
All right. So John is asking, will there be recording? Yes, there's recording. So give me some time to upload the video. And if you register for this webinar, most likely tomorrow, I will send you guys the replay by tomorrow morning. Okay. So yeah. Hun Cha is asking, right, does TPP students get special price? This is already very special.
Yes, this is a 45% off.
So, like what Jay say, it's not even charging a finger for this course, 497. It is a very good deal. Yeah.
Considering, bear in mind that you also have access to the Facebook group, you also have access like literally ongoing updates as best as I will go. Yeah.
So Pearl is asking, any yearly subscription? There isn't. The answer is no. So
Yes.
just a very quick recap over here. This AEP program is an e-program online, so you can access 24/7. Okay, so no subscription fee, one-time fee. Okay, in short, it's one-time fee. All right, yeah. So get the weekly trade list. You know, the Facebook group, right, is also one-time fee. You will not be kicked out. So there's no recurring fee, no annual subscription. So I hope that answer all the question about, you know, about the recurring fee, the subscription fee. There's no fees. Okay, so one-time fee only. So it's at only $497. All right.
Yeah.
Let me post the link once again in the chat box over here.
So Candice, is this a different Facebook group from the TVB? No, it's the same Facebook group.
All right. So any other question from the other audience? Oh, by the way, do you have this live webinar for them also?
Oh, yes. Yeah.
Oh, yeah, right. You have, right. So this additional bonus. Yes. So for those who are still here, okay, in a way, this additional bonus. So there's a live trading with Jay. Coming up real soon, right?
This is right now. This should happen. So if you enroll tonight, chances are you will take 2 or 3 weeks to finish it. I will run one in May, sometime in early May. So that's where the live trading sessions will be. So you will have 2 times of live trading session.
Live trading session, and because it is live trading, this will be conducted at night, right? So at night time, when the US market it is open, okay, not at a kind like 6-7 p.m. when the market hasn't opened yet. So expect it to be a night session, but it's a very cool session. It's a live trading session with Jay. All right. So only for the booster webinar today, for the people who sign up. Any other time when you sign up, there will be no there will be no bonus session for you guys. Okay. Yep. So this is a bonus for you. Yeah. All right.
Yeah. So mainly the live session is just to help you also synthesize what is covered during the program, how you can apply, because at the end of the day, you need to know how to apply. From application that gets you your results.
All right, so the deadline for this promo, right, is until the end of next week, because I understand that there will be people, you know, who will watch the replay, there will be people who will be busy, so we will give them some time until the end of next week. End of next week, let me check the date, right? That will be until basically end of the month, basically end of the month, so until like 30th of April. Yep. All right, before May Day. So I think enough time for those who want to watch the replay to take advantage of this offer. All right. So Ivy is asking, in the program, is it teaching all the free app to screen out all the work and all the output, etc.?
Yes, I'm using TradingView. You don't have to subscribe. The free account will do. So mostly the charting is done there. The rest is on the Excel sheet that I've already prepared. So you can just download it from the portal. All this, unless you don't have Office lah. But I think you should have Microsoft Office, right? Just using the spreadsheet, everything is provided lah.
Okay, Mui, okay. You ask you that when is this AEP program starting? Okay, this is an online course. So once you sign up for this course, you have access to the program. So you have a login and a password. You know, you can do your own schedule. There's how many modules is that inside, Jay?
Total there are 15 chapters.
15. So you can own time, own target, finish the sessions or your preferred timing. Yeah, so it's online. So once you sign up, you can get access to it immediately. Okay. So it's not a live session. Okay, so it's an online e-course. All right. So I think it's getting late already. It's about 10 p.m. And once again, I will repost the link in the chat box. So do take advantage of this offer. Just a recap: the AE program, online e-course, you know, one-time fee. Facebook group also one-time fee. All right. And it's only $497 plus 2 live bonus live trading session with Jay. Remember to enter the promo code MIVS0422. It is a small cap, all right? And the link is, everything is in the chat box and in the slide already. So I don't have Office, so can I still take up this course? Okay, they are free
Google Sheet.
Google Sheet, everything. As long as you want to use Excel or alternative, I think you are good to go. I mean, okay. Yep. All right. So I think that's all for today. All right. Last time I post the link in the chat box. All right, one last time. Okay, so and thank you so much for Jay for this sharing session. A good 2 hours. Is it 2 hours?
Yeah, I
2
think
hours
so.
sharing session. Okay, so I hope you guys enjoy very much and have a good evening ahead and enjoy the rest of the day. Okay, so good night, bye bye, and 晚安.
Thank you, everybody.
Bye.
Thank you. Bye bye.